Welcome, everyone. Thanks for joining in. And if you're listening to the recording on YouTube, please make sure to leave a comment down below. But today we are going to discuss something that we've had a few requests in our Discord, and that is harmonics and Fibonacci. So we'll dive deep into what harmonics are and how Fibonacci plays into these. And today is sponsored by Lana AI. So make sure to give it a follow on YouTube and check out the project. Really cool stuff happening. So without further ado, let's get cracking into what are harmonics. But before we do that, just a very quick disclaimer, just to make sure that you guys are all aware, this is not financial advice, and none of this is. Investing in financial markets always involves risk, and there is always potential of losing money. If you want to read the spiel, feel free to go ahead for it. Long story short, none of this is financial advice. So let's get cracking. What is Fibonacci, and why did I choose this shell? Well, Fibonacci is effectively a sequence discovered by a gentleman called Leonardo Fibonacci, and all it is basically a sequence of number where the sum of the two preceding numbers makes the next one. For example, 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, 5 plus 3 equals 8, and so forth. So this is where Fibonacci comes from and what it is. Obviously, we know that we use this very heavily in trading, but going back, you can see this Fibonacci sequence actually, when drawn out, it's everywhere in nature. It's basically this kind of spiral. You can find them in plants, in shells, in all sorts of things. So it's all around us. It's a mathematical equation, but we'll find it everywhere in nature. And markets, any financial market per se, does follow certain rules. You can call them nature's rules if you like, or you can call them cosmos rules, depend on how deep you want to go into it. But the long story short is that these Fibonacci ratios are very important for us. Obviously, the most important ones are the 23.6, which I personally don't really use, the 32.8, which is a really shallow retracement, and we'll get into that in just a second. And then we have the 61.8, which is called the golden ratio. I'm sure you've seen this before. Now, it's important to know with Fibonacci that the 50%, which we all love, the 78.6, which we love even more, and the 88.6, which is our favorite, are not technically part of the Fibonacci sequence, but they are obviously used for us in trading for various reasons. We'll have a look here in a second. I've got this really cool infographic, and I'll explain to you why. Obviously, 50% is a strong psychological level, but before we get to that, let's have a look at what a trend is. Obviously, market goes up, market goes down, and we all know that. The trend is effectively the direction of a market. So if we keep making higher highs and higher lows and higher highs and higher lows, the trend is obviously up. When we do those retracement, the Fibonacci sequence, or the Fibonacci, I guess, levels at which the market does reverse will tell us how strong this trend is. And I can do a little quick example here. Just take a quick chart this way. We can do so. Market goes up, market goes down, market goes up, market goes down, and market goes up. Obviously, this is a trend of a bullish trend. We want to know how strong this trend is, and in order to determine how strong the trend is, we simply go from the low down here to the high that we just produced, and we see where market effectively reversed. Now here you can see we stopped at the 50%. I just drew this up, right? So we want to understand, is 50% a strong trend or is that a weaker trend? Well, we can see here the 38.2%, which is, like I said, it's a good level. I don't personally use it too much. The reason why I don't use it too much is because it's indicating that the bulls, in this case, are really quite in control. This is a very strong trend, meaning that we have a very strong bull force coming up if we stop at the 38.2%. When we effectively retrace lower and we enter the 50%, we enter what's called a normal trend, and you can see here I've got in the infographic, so it's a normal trend. 50% is a psychological level, like we just mentioned, so it is a level that we should be at least wary of. So 50% is a normal trend. We expect some sort of potentially resistance here. In this case, we're doing obviously a bull trend, so we expect some sort of selling pressure here. When we reach the 50%, and this is going to be very important in harmonics as we delve deeper, we need to make sure to understand, are the bulls strong enough here to push the market high for another impulse, or are the bulls not strong enough and the bears are starting to take over, and then we retrace deeper? What happens if we retrace deeper? If we go deeper than a 50% and we enter, for example, a 61.8%, the trend, in this case for us is a bull trend, becomes weaker, meaning the bears are more in control, right? So it's a weaker trend as to what we have, which in exchange gives us a much better risk to reward. As we go past the 61.8% and we get into the 78.6 and the 88.6, we then enter a weaker and weaker market. Now, I personally prefer the 78.6 or 786, however you want to say it, purely because it is a weaker, obviously weaker trend than say the 50%, but it's not as weak as the 88.6. Once we reach the 88.6, that means that the bears in this case, in this trend, are so strong that to me, the risk to reward to go up is great, but there's also a stronger risk to potentially fail and do a break of structure and then continue lower. So 78.6% is my favorite for that reason. Gives us the best risk to reward, indicates a weak trend, a very weak trend, without going necessarily super weak. So this is, I feel, was really important to understand why we use Fibonacci in harmonics and how important it is to determine the trend strength. Okay, so simply put, the lower the retracement, so the lower number the retracement, the stronger the trend is, whereas the higher or deeper the number or the retracement is, the weaker the trend is, therefore giving us obviously a better risk to reward. I hope I haven't lost you here. It might sound complicated the first time, but really it's just a matter of understanding where does the market reverse and understanding the risk to reward. Now, that was the part about Fibonacci out of the way. Now let's see how we can integrate this into harmonics. What are harmonics? Harmonics are nothing else but geometric patterns or structures, however you want to call them, and they're based on Fibonacci numbers or ratios. The idea is basically markets do tend to do a lot of these M's or W, however you want to see them. Obviously, if they're bullish or bearish, depends. So if it was a bearish, we could have something like this and like this, and that's obviously the same thing, right? Like bullish or bearish, the market goes up, the market goes down. It doesn't just go in a straight line. In order to see harmonics in our trading patterns, we need to understand that there's some basic principles, and those basic principles are symmetry, proportion, and harmony. The symmetry part is basically saying that in order to rely on a symmetric move, the price validate the authenticity of the patterns. In this context, we mean that the price movements within the pattern, we have all different patterns here, should mirror each other in scope and time duration. Okay, the proportion has to do with the specific, and the key pattern is specific Fibonacci levels. We'll dive deep into these specific levels, and I'll give you some levels, and if you're live, feel free to grab a pen and paper, and if you're listening to the recording, make sure to pause and write this down once we get to it. This proportion ensures that the patterns maintain a consistent mathematical relationship in their formations. And finally, the third and final basic principle of harmonic patterns is harmony. Of course, they're called harmonic. When all the above criteria are satisfied, then we have harmony. Okay, so in order for harmonic patterns to occur, all these three criteria need to happen. And all that a harmonic pattern does, it gives us a potential reversal zone, which I'm going to mark up in my charts later on as a PRZ, just for ease of recognizing it. Okay, so this is going to be very important. Harmonic patterns give us potential reversal zone. Now, how many types of harmonic are there? Well, there's a few. And I can tell you, today we're not going to cover all. We're going to cover my favorite and the ones that I use. I can tell you, for example, that with that out of the way, we can obviously cover the bat, which is the most occurring pattern out there. We can cover the Gartley, which is going to be one of my favorite. We can cover the crab, which is an extreme pattern, the butterfly, and a Cypher, which is also a continuation pattern. There's many others, such as the shark. Some people use it, some people like it. I personally don't, and I am not going to cover this purely because I think it involves a much higher risk in the sense that the shark patterns actually gives you two potential entries, thus doubling our risk, and I don't want to get you guys and girls to double risk and dual entry points and stuff it up. So we'll try to keep it not just simple but also effective. Okay, now we talked about harmonics being M's or W's, and effectively we need to understand that there is a starting point. Doesn't matter if it's a bullish pattern or a bearish pattern. And in harmonics, when we use our handy dandy harmonic tool, which by the way is this one here, you can see it starts from an X. Don't ask me why, it's just how it goes. Instead of starting from an A, it starts from an X. So that is the starting point. And then obviously we'll make a low if we're doing this kind of pattern. A, B, oh, you don't see the trading view. Oh, okay, gotcha. That is bizarre because you should be able to see it. Let me just quickly see if I do this. You should now be able to see my trading view. Let me know in the chat if you can now see the trading view. Okay, because it's important that you guys see. Awesome. So what we were saying before, we can watch the recording and go back through it, but we were going through now harmonics and the starting point. So they start from an X, that's a starting point, and then obviously we do a low, we retrace to do a high, we retrace again to do a low, and then the harmonic finishes. So we have an X, A, B, C, D pattern. Okay, it's really handy in harmonics that they actually give you, you can see here, those little numbers in between, they're nothing else but the retracement. So instead of doing, for example, X to A, and you can see here we stopped, say for example, at the 50%, you can see that's my 50%, the harmonic pattern actually tells you that, so it's nice and clear and easy. But there are going to be some patterns later on that we'll see where we have to do a double effectively measurement, and we'll get to it in a second. But for now, let's just understand harmonic patterns start from X. So when you hear us talking about the X to A leg, it's the first leg, and then there's an AB leg, which is a retracement, then there's a BC impulse, and then there's the final impulse, which is a CD that completes the harmonic. Okay, so that's the M's or the W's that harmonics are. What does this mean for bullish or bearish? Nothing. They always start from the X, so nothing changes. Okay, you can see here this is followed by corrective wave, forming the I at a point B, and completing the AB leg. So nothing too complicated here. Basically, X, A, B, C, D is the harmonic pattern. Now, let's start with the bat pattern. For the next few minutes, we're going to go through some charts as well as some slides. You can see here I've got marked up the bat. This is very frequent in markets, okay, and the reason is it technically, when you're talking about bat pattern, if you YouTube it or if you Google it, they tell you that bat pattern is valid from X to A retracement, going as shallow as a 38.2. Now, personally, and this is just personal preference, you can do what you want, but we just discussed earlier about the trends being not very strong when there's a, or the trend being very strong when there's a 38.2. So I like to take my trades where I got better risk to reward. So in this case with the bat, 50% is my area. And you might say, Aussie, why don't you just go 61.8? Well, we'll have a look in a second. But there are some rules and guidelines when talking about harmonic patterns, and because they are mathematical equation, we can't just wing them. We need to be precise on our measurements, and we need to make sure that the harmonic is not invalidated. In the case of the bat, the X to A leg, so start to the first high or low depending on the obviously direction of the market or the harmonic that we're taking, the retracement of such leg needs to be, for me, at least 50%, but this is very important, must not exceed 61.8. If we have a harmonic or a bat pattern that retrace past the 618, right, you can see here we've gone X to A. I'll make that fib a little bit bigger so you can see. I'll make it straight. X to A has gone past the 618, you can see here. This is not a bat pattern, okay? Just know that for this second. We'll cover it into the next one. So for us to have a valid bat, it needs to be anywhere between the 50% retracement and the 617 effectively, because 618 becomes something different, okay? So the bat pattern is very, very common. I don't necessarily love it because we'll cover it later what it can transform into. But just know that when you see this kind of pattern, you really need to be aware of where the market ends. The B2C leg, which is obviously the next leg up, should range between a 50% and an 886, meaning that if we take this again, you can see it can be anywhere between, we delete this fib, we want to do the A to B now, right? So that this leg here needs to be anywhere between a 50% and an 886. So anything like this is a valid bat. So you can see it can take quite a different shape. It can be a shallow retracement or not. But important to have these really key levels marked up and really understand it, okay? And finally, the C to D leg, which is the last leg that completes harmonics in general, but in this case the bat, must not exceed 88.6 or the 886. And the reason is, we talked about it earlier, what happens once we reach the 886? Well, the market or the structure, or we can say the trend, becomes so weak that it could potentially fail. Okay, so if harmonic goes up, goes down, we reach the C, and then we go past, and you can see here, I'll leave the fib on so you can see, we go past the 886, right? And harmonic don't have to be pretty, they can be oblongated, they can be very condensed, so just look at the highs and the lows. Once we go past the 886, the market can literally just melt, okay? Up or down, depends, but so must not exceed the 886. This is what we call a bat pattern. Most common pattern, really understand what the key PRZ or potential reversals on are. And then how do we take a trade then? Okay, cool. Well, we've got all of our, let's just say, area marked up. Great. I'm starting to see some reversal here on a lower time frame, because it's important to know harmonics, just like anything else in trading, work in a way that the higher the time frame, the stronger your chances or your opportunities are. If you're taking harmonics on a 1 minute chart or a 15 minute chart, just know they're not going to be holding the same weight as a daily harmonic or a 4-hour harmonic. So really important to understand that. So that out of the way, let's just say, okay, cool, we take this long here because we're starting to see we're on a daily, we scale down on the 50 minutes, we're starting to see some breaker structure. So I'm going to take a daily with the obviously the risk just below my previous starting point here. And I personally, and this is just personal preference, I've tried it many different ways of doing it, but I take profit based on the last leg, high to low in this case, because we're doing a long, or you can do low to high if you're doing a short. And I take profit at the 50% of that leg. So we've got effectively a stop just below this low, right? And our profit is going to be at the 50% of this last leg. This is how I play harmonics. Why the 50%? Market can keep going up. Market can very well reverse. I like to take in my profits, and I'm happy with my 1 to 3. And that's just how I trade. I rather trade my 1 to 3, not get greedy and take profit, than effectively a round trip potentially again. So 1 to 3 is good for me, and 50% is my take profit area, which when we go back into our slides, you can see here, TP area is between the 50% and the 618. You can see this was perfect, but respected all the area. 51, almost 52 was the retracement, didn't go past the AA6, potential reversal zone, would have entered here, would have exit here, and happy days. Okay, so this is the first and probably very important harmonic pattern to understand. Once we get a solid grasp on the bat pattern, everything else will be a lot easier. So for those of you who are live here in the chat, let me know if this is all clear, and if you want, I can go over something else quickly over the bat again, or if there's any questions. Otherwise, I'm gonna keep rolling onto the next harmonic partner. Oh, awesome, very clear, thank you. That's great to know. Now, we talked about it earlier. What happens when we have a bat pattern, right? And we can just delete that. You're waiting for the bat to finish or planning ahead. Great question there. So I wait for the bat pattern to finish. And if this is on a daily, right? Obviously the market doesn't just go down. So on a lower time frame, once we got this kind of price action, we would have this lower high, lower high, lower high, this kind of price action, right? And then on a, effectively on a, I've got my magnet on, sorry. On a lower time frame, we will start to see some sort of breaker structure, right? Oh my gosh, that's horrible. Let me just redo that. That's horrible. Let me just get rid of that and we'll do it again. So this is how the market works, right? We would have some sort of price action like this, like this, like this, and then on a lower time frame we start to see a breaker structure, which is this. So we don't make lower highs anymore, we start making a higher high, and then we do this. That's when you enter, right here you see the breaker structure. We always wait for breaker structure. Doesn't matter the trade, doesn't matter if you trade harmonics or not, always wait for a breaker structure and you re-enter off the retest of that. Okay, so I hope that clears it up. And yes, we can have a look at the BTC in a second if you want. Actually, think on the daily there was a pattern that I wanted to show you. So this is BTC right this second, and you can see M or W's, it doesn't really matter, but this is on a daily, so I like that. Another important thing that we're going to do is we do take in consideration wicks, but, and this is a big but, and make sure you understand this, we go from the highest closing candle, right? So which one was the one with the highest? Actually, in the case of this, it's opening candle, so it was that doji, so we keep that. And down here, which one is the one with the lowest closing? It's this bearish candle right here, okay? So I don't just go by the wick, I go by the lowest closing. And then from there, let me just turn on my magnet. We go from that to that. And then here, which one was the highest closing? Well, in this case, the highest closing was actually this one, I think. And then down here, which one was the lowest closing again? This one down here. And then we have right there. Okay, so this is BTC on a daily. You can see we have effectively formed a Gartley, and we haven't got there yet, but we're going to cover it now, and then we'll come back to that chart. What happens when the bat pattern goes past the 50%? We just discussed, right? So let's go back up here. So once the bat pattern, which is the 50% retracement, goes past the 618, becomes what's called a Gartley. So effectively, a Gartley is nothing else but a deeper bat pattern. Okay, cheat code right there. So once the bat pattern goes past the 618, it becomes a Gartley. You can see everything else stays the same. So the BTC leg, so the down leg in this case, or the up leg if you're doing a bearish, should be between the 50 and the AA6, which is exactly the same as we did earlier, you can see. And the C to D leg, exactly the same as the bat, should not exceed AA.6. So Gartley and bat are very, very similar. The only difference is once we go past the 618, it becomes a Gartley. Here we can see in BTC where we went past the 618. And yes, so the lowest closing, or the sorry, I just saw that in the chat. We basically want to take the candle, the wick in the candle, of the highest or the lowest. We don't just go by the wicks, okay? So it's really important to understand. In fact, in this one, for us, will be this, okay? This will be the actual harmonic right there, because this is the highest candle, highest closing right there. So can you try to apply that on the recent BTC price action? Well, there's nothing to apply here. There's no M's or W's. You can see, like, I'm on a daily anyway, so I'm on a daily right now. But let me just quickly explain something real quick here, which is very important. On the daily, you can see we've gone past the 618. We went 66. You know, if I take an X to A, tuck, you can see we went past the 618 by a little bit. But the harmonic pattern actually tells us that, so that's handy. However, we went past the AA6. We said that the B2C leg should not exceed the 88.6, because the lower past the AA6 we go, the effectively weaker the trend is. Now, here's some findings that I personally have noticed in the markets for a very long time now, and these are really key levels, and it's really important to understand your risk. Harmonics very often tend to, especially now, tend to go past this invalidation point. Okay, so you can see here we went 1.007, so we actually went a little bit lower than this week. We made a slightly lower low. This does not invalidate the harmonic because we didn't close. But if you were, for example, to take a long here, you have to understand that you need to give enough room for the market to potentially go lower than the previous low, right? So I would have put the low here, and you can see the next week actually would have wicked us out. So you can play all these different legs, but you have to really understand that it's not until the final leg that your risk is actually a little bit better. Okay, so really important to understand these kind of scenarios where we take out liquidity, and this would, you know, without talking harmonics, this was an equal low, so very easy target for the market to come back and take. It's really important for us to understand where to put our stop if you're not playing on the last final leg. From here, obviously, this is a Gartley, and yes, it is a valid Gartley, but it's very much a weak Gartley. Okay, and you can see we stopped below below the 1, even though we wicked above. So again, if you would have put your stop here, thinking, oh, the Gartley finishes at the 88.6, you would have had to give yourself enough room, right? Enough room to play that that trade. The final trade, and you can see from here to here the 50% would have taken us to here. it wouldn't have, it was a 1 to 2, so not a 1 to 3. So I don't necessarily like that. I would have probably gone 50 to 618 because that's my TP, and I would have gone a 1.2.5. So that would have been still a valid sell. Obviously, if you went here, it would have been a better risk because you would have had the risk above the previous high, and you can see that was a much better risk to reward, giving us a potentially 1 to 4.5. Okay, so this is recent PA on Bitcoin, how we can integrate harmonics in actually on proper price action. But really important to understand for now, the bat fails past the 618, becomes a Gartley. They're the same, and you can see here, great example, nice and easy. Not everything is going to be as clean, but we need to make sure we understand where the potential reversal zones are. Next, and it's not too many to go, but it's important for us to cover the butterfly. Okay, so what happens once the bat fails and goes past? Let's just draw it so for sake of ease. What happens when we have a price action that goes X to A and we actually go past the 618, all right, past the 50%? So it's not a bat anymore, it's not a Gartley anymore, keeps going up and boom, goes past the 786. So once it goes past the 786, it's not a Gartley anymore, okay? It becomes what's called a butterfly. And butterfly are a little bit different because so far we've covered harmonics that go here, they make a lower high, higher low in this case, which we still make with a butterfly. By then, we need to start using our extension tool for the butterfly, and you'll see in a second why. Basically, what the butterfly does, the last C to D leg goes past the start of the harmonic, goes way higher or lower, depending, and it goes into an extension. Okay, so this you can see here, we've gone past this high, we've made a higher high, and we now have a butterfly, and you can see the butterfly was given away by the 789. How, when, how, and where? Oh well, let's have a look. How do we take a fib extension? So first of all, X to A needs to be a minimum retracement of 786. So we know the Gartley, once it passes 786, we might potentially have a butterfly in our hand. Okay, so once we have that, we then let the market obviously do what it needs to do. On the final leg, how do we calculate where the harmonic could potentially end? Well, we can see that the C to D, which is the final leg, must extend beyond the end of the X, meaning it needs to be, in this case, making a lower low, and in this case, making a higher high. So once it effectively extends past X, we can see typically you need to reach a Fibonacci extension of 1.27 to 1.414. About this, I have put it here in this slide, the 1.113 as well, which is a valid extension. Google will tell you that it's okay. Some other trading website might also take it into consideration. But just remember, we just talked about the strength of a trend. I like to have a better risk to reward and effectively consider the 1.272 to be precise and the 1.414. Okay, great, Aussie. How do we take the extension? And I'm seeing the question in the chat. So the Gartley is better than the bat because it allows for more favorable trade. Exactly. So remember what we talked about. The deeper the retracement, the better risk to reward. That's why I'm not a fan of the bat. It can very much fail and it can turn into a crab. We'll have a look later. Gartley, because it's in that 618, which is a sweet spot, it starts to become a nice pattern for us to give us a good risk to reward. Okay, so we have a butterfly here printed. So where does this last leg end? Let's just say price action is here currently. So we haven't finished price action yet. So in order for us to understand where X to A, where the C to D leg ends, we have to use the extension. You can see this tool right here, and we take the A. Oh, sorry, wrong tool. This one right here. So the 3 dot with the diagonal one. We take the A or the low, to the X, to the high, which was the starting point, and we literally just go back. You can see this one is like making a triangle. So you have to click here, and then you can come back. I like to have a magnet for that reason, but you can do it here if you want, but it's the same. So you basically go back to the start. And you can see I don't have it set up here, but if we turn on the 1.13, 1.272, and the 1.414, we want to see effectively the butterfly ending anywhere between the 1272. Again, you can take the 113 if you really want. I personally don't, but 1.272 is the minimum for me, and the 1.414. This is a perfect butterfly. What we have is a retracement of the A to B leg, which is the X to A retracement, past the 786, a deep retracement right here of the B to C, which is the retracement of the A to B leg, and then we have a failure, meaning we went and did some new highs, remember, or new lows, and we went into this fib extension. So learning how to do a fib extension is really important for the next couple of harmonics that we cover. So just know butterfly ends between the 1.272 and the 1.414. Okay, so this is starting to see, it's starting to become a bit more of an extreme pattern. You can see they tend to be quite extreme. In this case, you would have had a potential reversal zone right here, so you could have entered there. That's why I like to have the 50% trade. You can see the more extreme the price action, the more unpredictable the market can be. You can see in this case, we actually ended up going lower, but because we took profit at the 50% to 618, we would have still had a 1 to 3 risk to reward. So you can see TP area got hit, and happy days, that's a butterfly. More extreme than a butterfly, we only have 2 more to go, and feel free to ask any questions in the chat in the meantime. I'll get to it if I get to it. More extreme than a butterfly is the crab pattern. Okay, so what is a crab pattern? Now, we talked about it at the beginning, at the very beginning, when we did the, I just delete this and delete this. When we have a bat pattern, the very first pattern that we have, X to A, 50%, nice and clean, 786, or, you know, we'll do it there. What happens if we don't stop at the X? What happens if we go past the AA6? Once we go past the AA6 of the X to A, obviously markets start to become weaker and weaker and weaker. And we might, and often do, fail. And when we fail a bat or a Gartley, and I'll show you those levels in a second, we turn into a bat. Okay, so a bat is effectively an extreme Gartley or an extreme bat pattern that has a crab. The crab is an extreme Gartley or an extreme Gartley. Okay, so it goes way past it. There are key levels. We don't just, you know, guess where that's gonna go. And for this specific pattern, we need to actually have 2 extensions. Okay, so we have to do the same as we did earlier with the butterfly, which is taken from the A to the X and back to the A. In this case, I don't need the 1414, the 1272, the 113, so I'm just going to disable them just to avoid confusion. We take the 1618 extension of the A to X leg, and then again we have to take from the A to the B this time, so the second leg. And what we want to see is we want to see the 2618. Okay, so I can disable the 1618, and what the crab does, it gives us an area. Okay, that's why it's called potential reversal area or zone, PRZ. It's not precise. It can be a little bit lower, it can be a little bit higher. It's an area. Okay, so yes, it is mathematical equations, but it is markets after all. So once we approach that effectively area between the 1618 extension of the first leg and the 2.618 extension of the second leg, we have a crab. This is a very extended Gartley or a very extended bat pattern. Okay, so here are the levels. Effectively, X to A stays the same, stays below the 78.6, because now we know that if the retracement of X to A goes past the 786, we effectively have a butterfly. We don't want that. We want to stay below the 786, effectively being either a Gartley or a bat. The B to C ranges, just like in the bat or the Gartley, between the 50% and the 886, but the final leg must reach the Fibonacci extension of the 618 of the A2X and the 2618 of the B2 leg. I put this crap right here in the example for a reason. You can see in this case the area of reversal is very small, right? And that's why it's important to understand, once you're starting to play with crab patterns and even butterflies, the area, you just need to treat it as an area. In this case, you can see I wouldn't have taken this just because this trade, or this short I should say, just because we've reached the butterfly, sorry, the crab pattern. I would have wanted to see for a breaker structure. In this case, you can see we have a higher high, a higher low, then we make what I think it's an equal high, and then we make a lower low. So this right here was my opportunity to enter. Do you all see that in the chat? Okay, and then I take that short and I still apply my 50%, and that was my TP. So crab can give us a really good risk to reward, but you need to treat it carefully because it can go higher, and you can actually go sometimes as high as the 2, and it's called an extreme crab. So where basically it just goes 2618. So we're not going to do that. We're not going to cover that because that's really extreme. But it's important to understand a fail Gartley or a fail bat, meaning makes new highs or new lows in the final leg, becomes a crab. All clear in the chat? Have I lost you? You're going, what are you talking about, Aussie? All good. Awesome. So these levels are really important. We have one more to go. Awesome. Just take screenshots. The last one is the Cypher. Okay. You can see already from the shape of these patterns that we covered, we're always making either lower lows or higher lows. But for the Cypher, which is the last one, we actually fail. Okay, so let me just draw this from the beginning and you'll see what I mean. Let's delete this and let's start fresh. For the Cypher, we're also going to need to use our extension, but in a different way. So a Cypher starts from X to A, as always. That's our first one. Then it goes from anywhere between 50% retracement, basically like a bat or a Gartley yet again. So 50% to the almost to the 786, because if it goes past, it becomes a butterfly. So we'll keep it below. You can go as high as that much, or you can go 6, just that. But the giving away of the Cypher is the fact that instead of making a higher low or an equal low, we end up making a lower low. We fail this leg, we make a lower low, and then the final leg can go basically as high as X, but really anything past the B, anywhere here between the X and the B, which is basically a new area of untapped liquidity, is good. So for the Cypher, all this area could be considered a good area to reverse. Okay, so you can see we're taking it from the X to the B. This is all area of untapped liquidity because market has left likely imbalances here, and we can effectively finish it. Now, Aussie, where do I know where the C ends up? Well, let's have a look. We've got some, it's a mathematical equation. So again, we've got some really key levels to understand. The Cypher only requires you to do one extension, fib extension, and it's always the X to A. And the X to A needs to effectively be between the 1.272 extension and the 1.414 extension. Okay, let's do it together on the chart. So we have the X to A, we have a handy dandy extension right there, X to A, back to X. Now I disable all of them, so I have to re-able them. 113, 1.272, and 1.414. Cool. Again, the 1.13, you can if you really want to take it into consideration. I don't personally. It's not strong enough to dictate, give me the best risk to reward, so I don't take it. I take 1272 at 1.414. So if the B2C leg ends anywhere here, we know we have a Gartley, okay? So this is our golden area of potential reversal, okay? What tool was that to draw the fib levels like that? That is the, you can see here, so fib retracement and trend-based fib extension. Okay, so that's what it's called, trend-based fib extension. And if you want to take a look, a screenshot of my setting, I'll show you what they are. So I've got trend line, levels line, extend lines, just because I like it, but it's 1.13, 1.272, 1.414, and then obviously 2.618. Now, with the trend-based tool, you see me now. You have to basically go back. So you go down and back up, okay, to the starting point. Cool, easy, no worries. So once we hit this area, we know we have a cipher. We've gone past the A point and we've got into a lower low, or you can reverse it. It's the same. Like, it's basically once you go make it higher high. In this case, we know we have a cipher, and we can expect market to go, in this case, lower than the B point into a new area of reversal, okay, or higher, depends on the market. This is the cipher, and the cipher is a really cool pattern because it's a continuation pattern. Okay, so in this case, you can see here, once the C to D leg, which is the final leg, typically retraces above the 78.6, because if we think X to A can go as high as 78.6 before it turns into a butterfly, obviously, in order for C to D to grab this new area of liquidity right here, we need to go a little bit higher. Again, wait for lower time frame confirmations before you take the trade, of course. But you can see this was a beautiful Gartley right here. Tapped the 1.272, reversed, got into the 78.6, and boom, it just or 74.1, and then retraced back down. But Cypher is a continuation pattern. In this case, we were in a bullish, I think it was in a bearish. Anyway, basically, you continue the market continues, the trend continues usually when you see the Cypher. This is all I have for today for harmonics. Okay, so I know it's a lot. And we talked about mathematical equations. We talked about all sorts of Fibonacci levels. If there was a couple of things that I want you guys to really get acquainted to, is understanding how the trend works, understanding why we use Fibonacci, and understanding why certain Fibonacci levels are more stronger, effectively, than others for us when we trade. Right. So this is really important to understand the trend. Why the 38.2 is considered a strong trend, but not a great trade or potential risk to reward, whereas the 61.8 or the 886, 786, they are much weaker trends, but better risk to reward. So really important to understand the Fibonacci in that, and obviously really key to respect the levels that we talked about today, right? Don't just wing it. And understand which candles you need to measure from. We talked about it. The lowest close, or opening or closing, depending on where you're taking it from. Okay, and you can take the wicks. You can't find these slides anywhere. These are my slides. You can see I've got them confidential and copyrighted. But we'll talk about it in Greeny's group, and we'll see what we can do potentially. But yeah, this is recorded. I've put quite a lot of information on these slides, and I've got plenty more. But if there's any questions in the chat, feel free to fire them away, and we can do some more drawings, and we can discuss some more harmonics. So if there's anything that was unclear during this effectively Harmonics Masterclass, please feel free to shoot away. I can see a couple of people in the chats. So you're using harmonics mainly on daily or also on shorter time frame? Great question. Remember we talked about it. The higher the time frame. So when it comes to time frames, the higher the time frame, the stronger the bias, the stronger the direction. So, oh my gosh, this is really tiny. Okay, so daily, this is how it goes. Monthly time frame over weekly time frame over 3 days time frame over daily time frames over 4 hour time frame over 1 hour time frame over 30 minutes over 15 minutes. Okay, these are my, where did I write it? Did I? There. Monthly time frame is the strongest. I then go weekly, 3 days, daily, 4 hours, 1 hour, 30 minutes, and 15 minutes. These are the time frame that I use. I pretty much don't use anything else. You can see I've got some other 10 days and whatnot. I hardly ever go as low as 30 minutes and 15 minutes. It's only to do like those sniper entries that we take in GTG. When I give you like guys 0 drawdown, I usually take them on the 15 minutes. But I always start at least from the daily, and then I scale down 4 and 1. Okay. If I don't see anything in the 1 hour, that's when I probably go into the 30 minutes and 15 minutes. But to answer your question, I always take harmonics potentially from the daily. I don't like taking harmonics from anything lower than the 4 hour personally. Okay. Can you use harmonics to see what can potentially play out? Like you said, dip on a pump and then another dip. Yeah, of course. Yeah, that's what harmonics are for, right? Like we don't just use harmonics as a only way to trade, but they can be handy for us to have areas. That's why it's called potential reversal zone, right? Potential reversal zone to see. Like this could have been an easy, effectively an easy short for us. Okay. If you applied harmonics, you would have wanted to wait for a break of structure still. So you can see we didn't make. Let me get my arrow here. We didn't make a higher high. We started making lower highs, and we started making lower lows. So this could have been a great short right there on a retest. But the long story short is harmonics, use them as a tool, not just as only tool. Okay, because they have obviously from February 21st. February 21st was like the other day, wasn't it? So you're looking at intraday. It looks like an RFW. Well, yeah, I mean, you could. Yeah, it could, but you're playing on a lower time frame here, right? So you're playing on a lower time frame. The harmonic is not really formed yet. You can see this was potentially head and shoulder going up. That's why it's so important to understand that, and I said this in the recording, you want to see harmonic forming first. Like taking a trade on the, say this is an harmonic, right? Say this is indeed a butterfly, and we end up doing a, for the sake of this exercise, let's do this. I'm currently in a long. You can see I'm long on Bitcoin there, but if we were to do X to A, call that there. You can do X. Sorry, I've got my neighbor dropping off a tarp because we're preparing for a cyclone. A to X right there. So butterfly would end up somewhere here, right? 127 to 1.414, which is conveniently where I have my TP anyway. So it could, but it could also fail. So I would rather potentially wait for this bat if it confirms a bat and potentially catch a short, right, somewhere there, and 50% of this leg somewhere there, and then that's how I'll play this harmonic if I'm playing only by harmonics. I don't necessarily just play only by harmonics, but that will be a way to do it. Okay, hope that yes, absolutely, right there in the chat. Let the price come to you. Do not predict the market. You will get wrecked. Do not think you know where the market is going to end. The market does what the market wants to do. Okay, we can have all the handy dandy tools that we want, but ultimately there's no way to predict where the market will end up. Cool. Anything else? Otherwise, I am going to put this into YouTube so we can have look later. Oh, one last question, then we'll wrap up. When I see harmonics on a chart, it's clear, but it's close to zero experience. I barely see them by myself. Are there ways to practice, like using fib levels first and apply harmonics later also? The best way for you to do it is practice, practice, practice. There's M's and W's everywhere. Really get familiar with these levels that we talked about it, for the Cypher, for the crab, for the butterfly, for the Gartley, and the bat, and effectively start marking up. There's nothing wrong in marking up whenever you see any kind of move. You know, you go from a high to a low, you effectively just box up the areas of interest. So the 50%, the 618, you box them up and see what the market does. Okay, so the best way for you to really get a sense of understanding of where the harmonic is going to go, where they play out, is understanding Fibonacci, which is why I included that into today's lesson. Great question. You can use indicators. I know that there's some indicators out there, but I don't like it purely because they're not as precise as we can be with our measurements, and or they're not as tailored to what we discussed. Cool. Well, I'm going to wrap this one up. I hope I've given you enough content to go out there and practice some harmonics. I know that they can be a little bit daunting at the beginning, and I know they can be a little bit scary. They're not. Fibonacci is an awesome tool. And if you guys like today and you like this format, please do let me know on YouTube. Drop a comment. Let me know what you think. And we can do some more of this, okay? We can do some more of these masterclasses on different topics if you like them. And yeah, for now, I'll leave you guys. And yes, lot of practice. I'm going to go and prepare for cycling. And I'll see you guys around. Take care. Bye now.